All right, ladies and gentlemen, I hope you're having a wonderful day. I got your watch list coming in November 26, 2019, and these two stocks could still go crazy. Yes, I'm excited about it. We're seeing earnings still just peeking its ugly head. It doesn't want to give up, and it reminded me of these two plays. I'm going to go over those. I want to talk about what two companies I'm looking at there, as well as all of the trades we made today, and then some of the trades I'm looking at coming into tomorrow morning. There's a pretty good mix. We got some more earnings in the morning. We had this earnings after hours here with Palo Alto. We made a play on those, but then there's also some credit spreads. I know a lot of people have been asking, when are we going to start getting back into credit spreads? And I talked about it with this short week and the Thanksgiving holiday, how we're going to be doing that. I made a play, but it's a pretty tricky play. There's some underlying risks. There's a little bugger hiding in there that could pounce on us, but there's going to be a lot to cover, so I want to go over that, some basic keys for tomorrow, just kind of what happened today in the stock market and what to be looking out for, plays we made, the plays we need to watch, and then where we're going from there. So you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. Come join us live and watch. If anything here is ever unclear, you need clarification, you just want to see it live, we are trading live, open till close, 7 hours a day, and we need you. The cult needs you, baby. Yes, you. If you're watching this video, you've been summoned, and if you missed the live stream, that's what these videos are for. Now, if you're the fast food type and you want it, low quality fake chicken meat, and this isn't going after McDonald's, but if y'all want that fast food, this might not be the place for you. But this is going to be our short little recap. So even then, some of the plays, I know some people are like, wait, which direction? The stocks, you always say the stocks are going crazy. Which direction? I really strongly encourage you to pay attention throughout these videos. I am trying to make it as clear as possible. I do go a little fast. You can always slow the video down, but I will let you know kind of how I'm looking at it, and depending on the play, like yesterday's, the specific play was at HD. We'll go over that one, but the other two, we had to see the pricing, and I actually executed those trades this morning. So let's just stay in the game, but ultimately to be positive and respectful, and the most important thing you need to do, post your watch list below. Let us know what you're looking at. Post the plays, anything you got, earnings, and let's source that info. But right off the bat, the keys for today are pretty much going to be the same keys for tomorrow. It is watching out for this short weekend. Watch the trade war news and how everything is going to come into play. I'm going to keep my eyes out for anything to surprise. I'm going to look for divergences. Again, we kind of even saw that again with the bonds today with both TLT and the S&P coming up. But the premiums got clobbered on TLT today. So that's one area to keep focused on. But now understand kind of what we're expecting here coming into the short week. There's either going to be no move or there's going to be a big move. And today we got a pretty decent move, at 1%. The market was pretty much drawn up and down off of different news with the China trade war. It was pretty much concessionary from China, and it made it seem like there was going to be a phase 2 deal, but then one piece of news said there wasn't. The market kind of just took the positive and ran with it. We did get other good manufacturing data and expectations, which were a surprise, but otherwise the market is going to be pretty much slow coming into this week, and that's what I'm expecting, and that's why I want to use this as an opportunity to sell premium if we aren't going to get surprised. But now the next thing I want to take a look at, if you haven't seen my end of the year prediction, this is kind of what I'm expecting. If we are going to see anything now, maybe I got to pull it in a little closer. Well, here's actually November 2017. This is kind of what I'm expecting. I'm expecting the sell-off in November, and then coming into December, we will get that Santa Claus rally. It kind of looks like it's setting up here. So we got to be on our toes and watch out, but things are looking pretty good, and things are looking pretty bullish. That even relates to some of the plays. I don't know if you guys remember from last week, that double-sided play I said on Amazon kind of there. So again, that has to do with divergence, but keep your eyes out for that. But pretty much that's it. That is what you need to watch. So let us get into the plays. So I want to go over the plays. We did make a Palo Alto play today before after hours. So if you missed that, you can check it on the stream. If you had the stream alert, shout out the stream alerts. But there is going to be an opportunity to play this tomorrow depending on how it opens and then the continuation. So keep that in mind. Keep in mind everything you've learned. That first 10-minute window, this is going to be a good one to watch in the morning. Now, as far as the title of this video goes, I think two plays could still move, and they're kind of unexpected. One of them was dropped to us on the 11 at 11, and that is FedEx. So I don't have a specific play just yet because I am still deciding how I'm going to go on it and really what is the direction of the play. It is both ways. This is how we've played every single earnings play thus far. But the thing with FedEx, this reports on December 16th, so that's about 2 weeks. So why I say, these could still move, because in the midst of everything else kind of wrapping up its reporting as it has been, you're going to see a big company like FedEx. It had a big move last time, It's slightly right above where it dropped from. This is a key level. Again, we even pull up FedEx on the longer term. They're near bottom there. Oh man, maybe we even pick up FedEx for the long term, and we've made some long-term pickups today. We'll get to that, but I like them both ways. That's what I'm trying to look for, and the key now is setting it up. Do we buy right now, or do we wait till the week of earnings to set up the play? That's what we talked about on stream today, and really what I'm going to be probably doing, I'm going to look tomorrow. I want to set up a little bit tomorrow, and then or a little bit anytime this week, depending on how the stock moves, and then we're going to wait to get the second half of the play coming into earnings. So that's to play the IV, and with earnings so far out in a way, with all this stuff in the market, it's going to be interesting. But at the same time now, FedEx and what's been going on with the whole transports in the S&P, I think it's going to be a good one, and I think this could definitely be a play here. So I'm going to be keeping my eyes out for that. Be careful. And two, again, these are just potential plays. I haven't played them yet. I'm looking at them. Option trading is certainly risky. You can't lose off that much financial investment. Please consult with financial investors. Educational purpose only. So be careful. Keep that. Take it with a grain of salt. Yada, yada, yada. But that is the first play. The second play is Walmart, my friends. They had earnings 5-6 days ago. They dropped 6-7 days in a row. They haven't moved much. The volume's up there. I want to look for earnings continuation. It is very, very hard to time. So the direction, again, this one is both ways. However, I'm leaning more towards calls if it does start to go back up there. Again, I'm pretty much expecting it to shoot up. It's continuing here, but I'm expecting it to kind of make another move back up there. I think it's kind of selling off the jitters from earnings still, but if it does break below, that's why I'm saying both ways. There's an opportunity if it breaks on the downside, but ultimately, if things start to turn and it starts turning up good, it could quickly turn into something very bullish, and I think people are going to be kind of caught by surprise there. So watch out for Walmart, but I'm looking for the fact of earnings continuation. Cheap, low volatility stock can get affected by the news and everything going on. I like it. So those are your two plays. Now let us talk about the plays that we made today. I made about 6 trades on 5 companies. First one was Tesla. So here was Tesla. They gapped up in the morning. I did it within that 10-minute window. I thought we hit it pretty good and it looked pretty decent, but they ended up coming down. So there goes to show another point with that 10 minutes there in that whole video. But at the same time, it still closed a little bit higher. It did go up like I was expecting. We've been seeing some positive stuff with the truck and all that. But again, where it's at with this, I think there's going to be moves. But we got in something really cheap. Spent $29, got a December 6th credit spread. So this is for next week. And the whole idea, this is why I capped the gain. Pretty much I bought a 380 call, sold the 387.50 call. It's for 11 days out. And I only paid 29 cents and has a max gain of $750. That was kind of my only way I could pretty much get within 2 standard deviations for cheap because everything was expensive. So again, Tesla's going to be expensive. If anything, I'm going to move to credit spreads or debit spreads if I have to. So there's that one. Then there's the Disney. We got 2 weeks out, December 13th, 162.50 calls. I like them a lot. They were really near 150. And again, if it does make a move here tomorrow, watch that 10 minutes there, or watch even if it gaps up past this and sells off tomorrow. But I like these plays. They dropped a little bit. They were more expensive, and then they came down. And you could see here coming into close, they're at 23 cents. We spent 34 cents. So they lost a pretty decent amount of value despite going up throughout the most of the day. At one point, they were back to like break even here. So even though we got them around here, they were only at break even here. That's telling you about the premium. So keep that in mind. You could use me as a place marker here right now. You could see that you could get it for a little bit cheaper. So watch out for them. Then there is Dollar Tree. They report tomorrow morning, and this one is a very interesting one. I really like this one. This one started moving after hours. We've seen some of kind of how these discount plays have moved. This hasn't reported yet, and this was the after hours move, so we got in today. Shout out to Colt, baby. Shout out to Chaz. Shout out to Stream Alert. So we did that one towards close. But again, earnings play, it did meet the criteria. And the thing I liked about this, that the stock was pricing about $4 both ways if you sell the out the monies. So it's about $4 both ways, $8 in total. By getting the 123, I was able to get this here for what would have been a $10 move. So we're really just outside, and now you can see the stock has moved. It was a lot lower here at close, but based off of that, this play was at 2 standard deviations. We're now within 1 standard deviation. So the puts are going to suffer more, but that's going to be key. With them reporting tomorrow, we'll see. But watch for them for continuations. This play is already done, but I definitely think just like Palo Alto, there's going to be an opportunity to play there. So there's that. Then there's Palo Alto. We'll get to the Mcdonald's, but then I also played the Palo Alto one. We had a play on it last week for $50, and that one lost half its value on the call side, so I added another $38 on the put side. I was going to get an Iron Condor, but they weren't good enough in value. I didn't like them. But we got the November 29th, a weekly. And that's the key with this. Since it was Monday, I again, short week, I'm trying to avoid the weeklies, as you can see here, unless I'm selling premium like the Mcdonald's. But this one was decent. I want to see how this values and again how they open tomorrow morning, but I think this will be a good continuation, so we'll see. But we got that at 38 cents. Make sure you're there in the morning how we play this one out. That one or Dollar Tree might be our 8th week 1,000%er, so let's keep it running, baby. And then finally we got McDonald's. So this was a credit spread, and I've been talking about this one. I brought it up a few times, but they've been dropping, and now this is a very unique play because I should have known. It's like it was doing a deal with the devil, man. Anytime you guys are selling credit spreads, the devil is usually the credit. If it's too good to be true, most of the times it is, okay? So essentially I did a credit spread on them and it gave me a very, very high credit. This is what we did. We sold the weekly, again, short week, and I did 2 of these. I sold a 195 put. We shorted that one and then bought the 192.50 put. So you can see here, we sold the more expensive one, bought the cheaper one. They're both in the money. The whole idea here was to collect the premium. And then the break even on this is actually very, very nice. It's about 192.70 because I was able to collect on that play $223 per contract. So my max risk is like $37 or $27 per contract or something like that. So it's about $60 risk total, and that's theoretically. And the whole idea is if it bounces up, the break even on this contract is 192.70. So pretty much if McDonald's closes $1 above where it's at here by the end of the week, we will make money. Again, that's what I'm saying. It sounds too good to be true. High credit, very, very low break even. It seems like it will actually meet that. You could see kind of how they were trading here. If it does end up bouncing this week, we hit all-time highs, we'll make a lot of money. It's pretty much $60 to make $500, or even the break even is very low. But now here is the problem. The ex-dividend date is 11/29. That is this Friday. So I might talk about this in another video, but here's the key. When you sell premium in the money, so again, if we sold out the money premium, it's a different story. But when we start selling in the money premium, that becomes the problem now, because there's the exercise risk and or assignment risk where you will get assigned and so we agreed to sell somebody the stock, they agreed to buy it. So if they exercise their option to buy from us, what's going to happen? We have to sell it to them, but then we will be liable for the dividend. And in the case of McDonald's, it's $1.25 a share times 100 contracts. That's $125 times 2. That's a $250 additional risk on this play. But again, we got the credit. So the question is going to be if we get assigned or not, and then the additional risk minus the credit. Does it make sense for them to assign and try to take the dividend? But the fact that it's in the money gives the risk. It's kind of confusing, but I'm going to get a little bit more confusing with it, but show you guys kind of the light at the end of the tunnel here. Today's the 25th. Tomorrow will be the 26th. I believe by the 27th. So if we do not, I'm pretty sure I might get if it's a really bad play and it is risky, I'll get assigned on it tomorrow morning. If not, we have to like the 27, or I think even tomorrow, because even though there's the ex-dividend date, that is the date of record that you need to own the stock to receive the dividend. It takes 3 days or 2 to 3 days for that to clear. So just because you purchase a stock today doesn't mean you become on record. It takes 2 to 3 days to get on there. So the closer that gets to the timing of it, or the closer we get to Friday, that assignment risk gets dramatically lowered. But right now it's pretty high. So we'll see. Someone even said, should I cut this play? Because I realized it after. I said no. I said, even then, 125 times 2, my max risk will be 250. I collected 250 or $400. And then if I even lose that extra $60, max loss will be like $300. I'll take it. It's pretty much risking now. Although it's not good to lose in that sense, it's pretty much I'm viewing it differently. Because one, if I am able to mitigate the assignment risk, it's a $40 or $50 to 500 play. If not, it's pretty much risking 300 to make 200. So a little bit more worse, but we'll see how that plays out. So that was that play, and that was the rest of the plays today. So let's get into everything else. But be smart with all these, and hopefully you guys are watching them. But we're going to be watching Palo Alto, McDonald's. Then there's GBT. We caught this news mad early. I was surprised. So some people said we got it a little earlier, depending on when their stream alerts. But mine is saying it's came in at 12:12. This is right before close. You can see that GBT patients, Oxbryta, sickle cell blood approval. And it started shooting up, and some of the options look cheap. I saw some people, they used some of our tricks. We saw them snake the chain and did great on that. But then it dropped, and then it was a company news halt. Then they got unhalted. So watch what happens here. We did see what happened with KZIA today. That thing kind of was a low-key dud. It ended up dropping after being up at like 980 this morning. So it's 50-50 with these biotech, so we're going to have to see. But watch them. I think that could be interesting. Going to be watching Dollar Tree. That one's great. And then now Beyond. I picked up one share of Beyond. I've been fiending. So again, I feel how you guys are. Sometimes you just want to deploy this capital. We in the cold and we like to do push-ups. We in the cold and we like to do push-ups. We in the cold and we like to do push-ups today. Something just triggered that. I don't know what that was, but I grabbed Beyond. I grabbed one share of 78.38. We still got a decent amount. I gave myself another advance. Just I wanted to see how the account would look on the long term. We're doing pretty good here. Steady advances, steady growth. We're up on everything. It's nice. It's nice. I like it. So I got Beyond, but it started popping on the news here that Impossible is looking to do a private placement to double their valuation before IPO. So if that was the case, it would show the demand in this industry. It would show how people feel. And Beyond is definitely going to benefit off that. But watch them and then watch Facebook. Facebook and Twitter today, they got news that there was some hack or it was one audience app, and it pretty much had a backdoor loophole with it and exposed Android users. So there was a problem with that. Facebook had a weird dump off again, testing that 200 level and what that means. Some people were saying it was technical. Some people wanted to blame the news. Either way, keep your eye on it. I think something's brewing there, and watch how that news impacts it. Then NVIDIA, they popped off today. They hit the 220. We were looking at them in the morning. We were too slow on it. I thought it would come down. It really rocketed. That was a great play, but watch out again for those. That was one of the plays I was looking at in the morning at the same time of everything else. Then there's going to be Disney. I still like it. I like where it's at. Same thing with Tesla. And then, like we said, Walmart and FedEx. And then Lyft. That's the next one I want to be looking at. I like Lyft a lot here. And again, I think, we got Beyond Me. I wanted Uber, but if they weren't up so much, I think Lyft might be the next one we add to the long-term portfolio. Lyft or Redfin. I'm still waiting and trying to check out the growth and kind of an entry point, but that was kind of been my issue here just because we have so much growth in the portfolio. We have so much value in dividends. I'm trying to get some of this growth in here to kind of level things out, but in no rush. We'll see. We even talked a lot about it today, kind of the whole nature of the value of our dollar, what we're holding, everything, and kind of waiting. So that's what we're trying to get a hold of. That's why I kind of like Beyond. At the end of the day, we did make that pickup, but even with this price, even though it's pretty high in the grand scope of things, we're at least getting it on the third or fourth day of IPO hype. So we'll take that. But it'll probably come down and test it a little bit lower. We'll see. But watch out for Lyft. I like them. And then to our last chart here, Amazon. I like them both ways. They really rocketed it. That play went up a little bit. Remember, we did that both ways. We got a big debit spread on the calls and puts. Depending on what the market does here at this point, Amazon's going to be a good one. So you could even watch for some of the short-term ones. I'd keep my eye on that. But I like them. I like Qualcomm. But they're kind of in that dud again. If they kind of don't get back up here, think Starbucks after that other earnings, where Starbucks kind of did the same thing. So they could even be on the put side. We'll see. Watch HD. They bounced today, but that was the play that I called out yesterday. That play actually did surprisingly good, but it's doing something to notice here. Pretty much held up its value. So it was at 26 cents yesterday. It shot up to 36 cents today. Didn't go below 26 and then kind of sold off there at the end. But I still like this play, the 207.50 put. I'm going to be keeping my eye out for it and to see what Home Depot does here. Or I might even look to do a credit spread like we did with McDonald's. So we'll keep our eye on it. But I still like Home Depot. Then do not forget about the streaming services. Again, one more extra day on Roku. We still have that play from last week. It's down a lot. So we'll see how this plays out, but I still like Roku. And then a secondary right there is Netflix. They've still been killing it. They're again at another crucial point. If they get back up here, they're going to start entering 330, and then anything above 330 or even like 340, it's back to a lot of those other levels. So watch out for them, and they could be a good swing, even kind of like Amazon. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure we see you there in the morning. Make sure you post your watch list. Make sure you're ready, grateful. Get ready to source information and keep your head in the game. I said it today. Nobody really knows how close they are to something in many ways, whether it's trading, a big event in your life. You don't know what it is. I was reminiscing on this today, and I was surprised, how clueless I was at one point when I was just literally right around the corner from achieving something and doing something that was either great or that would have changed my life. It is right there, and you would have no idea today. So keep your head in the game, stay focused, stay hopeful, be smart, budget and allocations. We talked about that a lot today, and that was very important. So keep that up, and I'm going to see you in the morning, baby. Happy holidays, happy Thanksgiving. I'm thankful for all of you, and let's go.